Hello traders, welcome back to another episode. Today's video, I'm going to be doing a full analysis for next week forecast. We're going to be looking into a few pairs over here. We're going to look into DXY, which is the index that we use to measure the strength of the US dollar. We're going to look into GBP USD, Euro USD, and Gold USD. So if you're interested in this video, please smash that like button and make sure you subscribe to the channel. Welcome. My name is Jamal. Let's get into it. So here we have DXY. So we're going to start with the higher time frame, and then we're going to roll down to all the way to the lower time frame. So we can see that on the 3-month time frame, we have some type of bearish momentum going on. Okay, we have a bearish momentum going on, and we can see that here we have an area of supply on the 3-minute time on the 3-month time frame for DXY. All right, now what we're going to be doing is we're going to be looking into the monthly time frame. The monthly time frame, what we're looking for is the price to head down to this direction and see what happens. Before I check this out, first I want to see what's happening over here on the order flow. Okay, so the order flow here, we can see that if you look at this is the last top or the last up move before the down move. Okay, so we can see that this is the last order flow. All right, and right now if you look at it, price here is already reacting on this order flow. Okay, this is already mitigated by this. This is already mitigated by this one. So this is how you check the order flow. And before this down move, this was the last up move before the down. It's already mitigated by this. So now the only thing that's left was this order flow right here. All right, let me delete all this stuff so we don't need it. All right, so now we can see that price is already reacting around this order flow or this last pullback before the down move that created the lows before the break of this beautiful structure. When you look at it, like you can see that. Okay, all right, so now let's go to the weekly time frame. Let's look into the weekly time frame and analyze what's happening. On the weekly time frame, we can see that price is basically creating highs, lows, and this is the last highs. But then if you zoom out, you will see something else. You can see price creating a change of character somewhere here. First of all, we have a break of a structure here, and then we have another minor break of a structure, which is this is a valid pullback because it traded, the candlestick traded below the lows of this last candle. So therefore we consider this as a valid higher high, higher low led to higher high. So this is how it's gonna be: highs, lows, okay, highs, lows, highs, lows, highs, lows, and then a higher high. So now we can see that we had a change of character. We're not going to use this, mark this as a inducement, and the reason why is because price is tapping on a higher time frame supply zone or a higher time frame order flow. So therefore, this pullback here, this high low, we're going to use it as a change of character. So this is a valid change of character right here. All right, now we can see that price left out this area of supply zone. All right, we have an area of supply zone right there. We can see that price also tapped on this area of demand zone. Okay, this area of demand zone, which is around this zone right here. So once the price did tap on this demand zone, what it did was it created a change of character because we can see that price is attracting to go to this zone. Okay, so we have a high, we have a low, we have a lower highs, and then we have a lower low. Okay, all right, So the only order flow that needs to be mitigated, which is this is the last up move before the down move, is right here. So this is the last supply zone that we have. And right now we can see that price is reacting to this area of demand zone. Okay. There was a higher time frame demand zone right here. And we can see that price is tabbing on a higher time frame demand zone because we're looking for the price to continue to the downside in order because we are in a bearish momentum on the higher time frame. Remember that, okay? All right. We're just trying to determine the strength of DXY there so that we can go ahead and see where US dollar is, okay? So now we have a change of character right here because this is the last lower high, led to low low, broken. This structure took out already. Now if you try to tap on your Fibonacci levels, you mark this, you can see that price came all the way down to a discounted area, which is this zone around the 78 and the 88%. We can explain. We're going to be talking about Fibonacci maybe later on in the future, but right now we're just going to focus on what's happening. So we can see that if you pick your Fibonacci and you mark the low and the high of this candle, you can see that there is an area around the 88 to 78%. There was some type of imbalance, and we're going to go ahead and mark this entire zone, and we can see that price is reacting around this zone. So what's happening is price is trying to go to this area, okay? That is where the sell is gonna initiate. Before we see a seller's market, we have to wait for the price to come over here. But right now we are trading between this low to this high right here, okay? So we're going to be buying until this zone. You can always trade the counter trend because it takes a long time to wait for this type of price action. So therefore you can trade this counter trend, and then you just have to know where the price is going, which is this area here. So you have to know your high time frame areas, and then you can trade the counter trend like that, okay? So now let's go to the daily time frame. Okay, we know that price is trading from this low to this high on the weekly time frame. So now what we're waiting for is price tapped on an area of demand zone right here on the weekly time frame. And then what we did was on the daily time frame, we redefined this zone, and now we go ahead and mark our area of demand zone. So what are we waiting for now? We can see that we're waiting for a change of character. So now we have high, low, lower high, lower low, lower high, lower low. Remember, we're not going to mark this as a structure because this is an inside candles. And the reason why I say these are inside candles, because it did not trade below the low of this candle. It's just traded within this big candle. So this is not a valid pullback. If you want to learn about the pullback, go ahead and watch my pullback video in my channel. Maybe you will understand how to identify a real pullback. Okay, so we have a high, low, lower high, lower low, lower high, lower low, lower high, and then lower low. So also this is not a valid pullback. Remember, the reason why is because again it's respecting the high and the low of this last bearish candle. Okay, so therefore we don't consider this as a pullback. This is an invalid pullback. All right, so now we need the price. So now we can see on the daily time frame price is trading around this high and this low because price tapped on a higher time frame demand zone. We're waiting for a change of character in order to determine a price that's going to that, in order to determine a direction change or a change of character. So what we need is we want the price to go all the way up, create a change of character, take this area out, and then price come back this zone, and then this is where we're going to be expecting a buy momentum. So now we are still selling. But right now there's no place that you can sell because price is in the middle of nowhere. Grab your Fibonacci level again, mark the high and the low. Okay, so this is the discounted area for buyers, and this is the premium area to sell. Okay, when you're selling, you sell from a premium area, and when you're buying, you buy from a discounted area. So here we have to wait for the price to go back to an area of premium. So if you grab your Fibonacci to down here, we can see that this is our area that we are looking at, okay, around the 78 to 88%. All right, so this is where we are going to be looking for price to reverse, and if it doesn't, it will probably pull back and then create a change of character. Okay, once the price creates a change of character, this is the first stop. Once that happens, we're waiting for the price to come back to this zone, create some type of inducement over here. Inducement right here. And then after that, we're going to be looking for a buy. Okay, remember, because we need the price to go all the way up here in order to look for a sell position. But for now, we're going to be looking for a buy, a seller's position on this lower time frame, which is the daily time frame. And then if the price takes out this area, which is the last lower high that led to lower low before the break of this valid structure, then we can look for a buy. What I mean by that is we can look for a buy if the price closes above this zone, and we're looking for a weak dollar if price reverses from here. Okay, all right. And how do you use DXY? Whenever DXY is strong, this means USD is also strong. So let's say you're trading GBP USD. If DXY is strong, you're going to be selling GBP or pound. If DXY is weak, like we see it right now, because right now DXY is basically creating lower high, lower low. The price hit an area of demand zone, and now price creating low high, lower low because we don't have a change of character yet. So therefore, at this moment, we have a short-term US dollar weak. Okay, very weak right now because it's kind of short-term, but not a long-term though. Remember, okay. All right, so price comes over here. This is where we're going to be determining either we're going to be selling, either we're going to be buying pound. If price reverses from here, pound USD is going to be strong, so that we're going to be buying pound and selling USD. And if price continues to break this area, we're going to be selling pound, and that creates a strong USD. So you have to understand it that way. All right. Okay, so now let me go to the 4-hour time frame. Remember, we're trading between here and here. Let's go to the 4-hour time frame and see what's going on. Still, remember, the daily is much stronger than the 4-hour time frame. So a lot of traders who are trading SMC might end up selling or might end up determining weak dollar. But reality is, this might be an area of inducement, because remember, price broke the structure, created some type of inducement, because there are orders that are clotted around this area. So price might consume this area, which you can already see it took out stuff already, cleared out some type of stop losses right there. But we're expecting for the price to probably come over here again and then go back here, and this is where we're going to be looking for a sell to continue to the downside or a change of character to the upside, and then that creates strong USD. All right, so my bias right now is I look at this as an inducement, because we can see that there is a strong possibility of some type of imbalance going on right here. And you know, when price creates some type of imbalance, price always, this is what the price does, creates a balanced market, buyers and sellers all equal, and then price If it goes up, it creates some type of imbalance. So now price will always gravitate towards this imbalance before it continues to the upside. So remember, if there is an imbalance above a structure like this, price will more likely not continue to the downside, but do a little bit of reversal. Trick the traders, because this is what we call an inducement. Induce the traders into thinking that price reversed to the downside, and then price is going to continue to hit a level of imbalance before it continues to the downside. Okay, so now in this case we have a weak DXY. Right now let's check out the 1 hour time frame. The 1 hour time frame, we can see that price created a short-term change of character. So what we're expecting is price probably to come down all the way here to fill this imbalance, which is this wick here. To fill this imbalance, take out all these liquidities, to fill this imbalance, and then continue to the upside. Okay, but still we have a weak USD. Now let's look into pound USD. All right, pound USD, we're going to start on the higher time frame as usual, right? Okay, very clear. What do we have there? We have a DXY is weak. Pound is basically a little bit going up, but let's look into this very quickly. We have a high, low, lower high, low, low, low high, and then low, low. Getting the bigger picture is very, very, very important. Now let's go to the monthly time frame. If you go to the monthly time frame, clearly you can see a downtrend. High, low, low highs, low lows, meaning this is your last break of structure to the downside. Okay, your last break of structure to the downside. So now clearly price is trading between this zone to this zone. So now if you grab your Fibonacci level, you're waiting for the price to come back to an area of premium, which is around this area, before we continue to the downside. Okay, before we continue to the downside. Okay, remember when we looked into DXY, it was kind of bullish. It was kind of bullish because price reversed from an area of supply zone, and we have a pullback right now, but we're expecting a continuation. Remember, we checked that already. Remember, we're expecting a continuation. Okay, remember, we're expecting a continuation on the DXY. So this means we're going to be expecting a sell on pound USD. All right, so here we can see that we have a couple of things that we need to look into. Number one, let's go ahead and mark all of the order flow areas. Sorry. So we have a high, we have a low, we have another high, low, high, low, high, low, high, and then we have a low. We also have a one candle low, high, low, low, because this is trading. This candle traded above the high of this candle, so this is a valid pullback. Okay, but now the main important thing is we need to know the order flow. Okay, we need to go mark our order flows. But before I do that, let me go back to this area and mark our higher time frame area of interest, which is right here. This is our area of interest because we have this gap or this imbalance that we think price might reach later on. But now let's go back to the weekly time frame for pound USD. We can see that all these order flows are already mitigated. Okay, this is all mitigated already, and this is the last order flow here. Price already mitigated and then reversed from it. Okay, price reacted to it already. All right, good. And now what do we have now? Now look to the downside. Okay, look to the downside now. Okay, now we have here, we have high, low, high, low, high, high, low, and then we have a high, high. Remember, this is not a valid pullback because this is not trading above the candles, and it's also respecting below the candle. So therefore, this is not a valid pullback. This is what we consider an inside price action bar, okay, or an inside bar. So here, when the price hit this area of order flow, we can see there is a change of character already. Okay, we can see there is a change of character already. So now we can determine that price is trading between this high and this low. All right, as long as price is trading below this zone, we're looking for a sell position on the weekly time frame, but that's going to take a long time. And the reason why I say that is because we need to take advantage of the short-term moves, get that going. So we can see here there's an area where price might go to, because there's a lot of imbalance going on here. And if you look at this candle very much, this candle took out the high of that candle right there. You have to look at every detail, okay? So therefore, this candle is a valid supply zone. All right, let's go ahead and mark this supply zone real quick. All right, so now what we're looking into is on the daily time frame, we have to look at the order flow, okay? We can see that this order flow already price tapped on it or already reversed to it. We can see this order flow already being mitigated. We can see this order flow already been mitigated by these moves. We can see that price already mitigated by this, but now price was reacting into this small area of what you call a imbalance shadow. Okay, remember when the price leaves a shadow, because this shadow is very important because it took out this candle's highs. So therefore, this makes this candle very important area because there was a lot of orders that was filled around this zone. All right. Or you can go ahead and just mark this as your area of interest. If you want a clarity, an area of interest right here. There's a little bit of imbalance going on here too if you look at it, okay? Let me just zoom out, zoom in. Okay, you can see that there is some type of imbalance going on between the low and the high of these candles, okay? The high of these candles right here. Because price a little bit went into it. It didn't mitigate all the way. If the price went all the way in here, mitigated this candle, then we didn't have anything. Then we were expecting price to continue to this shadow here. But now what we are seeing is price did not reach this area. So therefore, there is some type of imbalance between this low to this high. Okay, there's a little bit of imbalance going on here, and there's also a little bit of imbalance between here to here. So, all right, what we're looking for now is we can see here price created a change of character. Okay, because we're looking at a short-term buy positions. So we have low, high, high, low, high, 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 low. This is not a valid pullback. Remember why? Because price respected the high and the low. Especially we're looking for the lows. For the price to create a pullback, it has to trade below the low of the previous bullish candle. Okay, it can also be a bearish candle. It doesn't really matter. The color of the candle doesn't matter most of the time. So remember that, right? So here we can see that we have a high, low, price coming back to test this area of demand zone. And then price created a high, low, and then price created some type of high here, taking out fully this zone. Okay, this zone right here, sorry. So right, because this is not a valid pullback, so therefore this is the real break of a structure right here. Price came back, retested this zone, continues to the upside again. Now we have another high, led to high, low. And then price came back to mitigate this area right here. And then we have a higher low, led to a higher high. All right, led to a higher high. So this is basically one entire move. From here to here is one entire move. And the reason why I say this again is because this is not a valid pullback. So therefore we count this as one move that took out these areas here, okay? This high here. So therefore, now price is trading to the upside. We're trading between here and this high, okay? All right, so how do we deal with this type of market? What we're waiting for is we can see that price is gravitating towards the higher time frame area of imbalance or demand zone. So remember, when we go to the higher time frame, we can see that price is trying to go all the way up here, okay? We can see that. All right. So on the daily time frame, price is creating higher highs, higher lows, higher highs, higher lows. And this tells us that price is showing a sign of short-term buy momentum. All right. So we have a low, high, higher low, led to high highs. Remember, this is not a valid pullback. Why? Because you can see the lows of this beautiful candle is respected. And the price now is trading above this candle. So this is one entire move. All right. Okay. So now, if you grab your Fibonacci level between this low to this high, price is not coming. It's not at the. Did not reverse around the premium area, the discounted area yet. Okay. So we want the price to come to this area around the 78 to 88%. And the reason why is because we can see that there's a shadow that needs to be rebalanced. Okay, so price can go ahead and use this as a liquidity and then come down here before it continues to the upside. So right now, you just gotta keep your hands together and don't take a trade around this zone, because the price is in the middle of nowhere. It's right in between the low and the high. Okay, so you never trade in between, otherwise you're gonna get chopped off. What you do is you wait for the price to come back to an area of demand zone, or go to an area of supply zone and sell it from an area of supply zone. All right, now let's go to the 4-hour time frame and look into this very clearly. Remember, the higher time frame is the key. Okay, higher time frame is the king, right? So therefore, you always respect the higher time frame. So now, what the price can do is, we can see there's also there's a break of a structure right here. So now price can take this as some type of inducement, because it created a triple bottom, triple lows. So now what price can do is come all the way down here, and here, voila, we have a valid demand zone, my boys and girls. We have a valid demand zone right here. Okay, but we're not doing anything right now. We're just going to be buying from here. Okay, as long as as price is trading above this area, we're looking for a buy position. Okay, if price goes below this area, then we're looking for a short-term seller market, because we have a lot of areas that needs to be filled on the higher time frame. So for now, what we're expecting is we need the price, since the price already liquidated these areas, we are expecting the price to come all the way down here, take all the liquidity that's sitting over here, since people are buying from here, from here, from here. Okay, so price will take out all this stop loss that's sitting over here in order to fill the rest of the institutional orders. Okay, and then continue to the upside. Very beautiful. All right, so this is what I think might happen with pound USD. If you go all the way down to the 1-hour time frame, still price is respecting this high, and still price will always respect the higher time frame zone. So if you zoom in a little bit, that's why you need to look at the bigger picture always, okay? Since price created some type of inducement, price would eventually come back, take out this area before it reverses to the upside. So this is where I'm expecting a pie position for pound USD. All right. And right now I'm just sitting on my hands and I'm not doing anything. You can scalp it on the higher time, on the low time frame, but I will be waiting until price comes back to this zone. All right. Now let's move on to. I don't think we're gonna get a long time. We don't have a lot of too much time to spend on Euro USD, but we're gonna look into gold USD since we already checked out pound USD. I think we can skip Euro USD, so now we're gonna check gold USD or XAU USD. So XAU USD, let me clean this out. Remember, if USD is strong, you'll be selling gold. If gold is strong, then you'll be selling USD. Let's look into this real quick. Let me just show you guys the big picture right here, okay? Okay, where is DXY? Right here. Here, let's use gold. Okay, and now let's use the same time frame here, okay? Let's go to the higher time frame. And let's go to higher time frame here. Okay, let's go a little bit of lower time frame. And let's go a little bit on the low time frame here. So now this is buying and this is selling. You see how it differs? No, sorry. I'm looking into the wrong thing. Okay, gold USD. Great, beautiful. Okay, you see how different it is? This is a buying and then this is selling. Okay, but our job is to make sure that we look into the price action of both DXY whenever we're trading a US dollar. Okay, anything that comes with the US dollar, you have to look into DXY in order to determine the strength of USD. So gold, we can see that this is a break of structure right here on the higher time frame. Price liquidated the higher of these areas. And also we can see that price reversed from this area of demand, but price might come all the way down here before it continues to the upside. Okay, all right, because we have an area that needs to be filled. Okay, now let me go to the weekly time frame. On the weekly time frame, there are a few things over here, okay? First of all, we have a price clearing high, high low, higher high, higher low, higher high, higher low, okay, higher high, higher low, and then higher high, okay? And then we have a higher low, but not valid, okay? Not valid. All right, so price respected this area because it just took out liquidity and then reversed right after that and then breached the high of these candles. So therefore, now we have to see if we can mark our chart, our order flow, okay? Now let's go to the daily time frame here. Okay, on the daily time frame, there are a few things, guys, okay? A few things here. We have a low, high, higher low, higher high, and then higher low. Okay, now we can see price is trading between the low and the high of these beautiful candles here. Okay, all right, now if you grab your Fibonacci levels and put it right here around the 78%, we can see that there's this area that needs to be mitigated, this area of demand zone. And we also have an area of imbalance around the 88%. All right, now let's clean this up. We can see there's low, high, higher low, and then higher highs. Okay, So now price is trading between this low to this high. So what we are expecting is for the price to come all the way down here and then tap on this area of imbalance before it continues to the upside. Because remember, buying around here is not going to be a good option. But this is in the middle of nowhere. And you don't buy and sell in the middle of nowhere. You always buy and sell from an area of interest or an area of demand. Sell from an area of supply and then buy from an area of demand. So this is the area that I'm expecting before I consider buying gold USD. All right. So now let's go to the 4-hour time frame. Let's look into the 4-hour time frame. All right. This is a break of structure. Very beautiful. Go ahead and mark this real quick. Okay, you have this break of structure. You have price take out this inducement and then reversed from this area of demand zone. But price did not trade above this zone yet. So therefore, price might come all the way down from price. Basically, we can see that. Let me just zoom real quick. Let's zoom real quick. Short-term moves. We can see a short-term moves right here. You can see price respecting this area. But remember, there is an entire price action going on in this area because this is an imbalanced shadow that needs to be mitigated either way. Okay, around the high. Remember, we're trading between this low and this high. But price right now is creating some type of trick. It reacted around this zone and then sell off right away. So here you can see after the tab on this demand zone, this demand zone right here. Let me go market. All right, this demand zone right here on the 4-hour time frame. We can see price created high, okay, low, lower highs, and then lower lows. This is not a pullback, and this is not a pullback because the high of this candle is respected, and the high of this candle is also, the low of this candle is not breached, and the high is breached, but this is not enough pullback because price did not create a lower low, so therefore this is not a pullback yet, but this is a big pullback that we can consider. But then we have a short-term change of character right here, and then we have price creating some type of liquidity all the way down here. And then we can see that we have a very beautiful area of demand zone. Okay, you can see an area of demand zone. Price can come all the way over here, react, and then come down all the way over here before it continues to the upside. So what we're looking for now is we're waiting for the price to come down here in order before we consider any buy position. And then once price comes over here, we need some type of change of character. Wait for the price to come back to a demand zone and then buy to target this area of imbalanced shadows, because this shadow high and the close of the price right here. This is the close. This is the open. This is this is the close of the price and this is the highs. So price will probably fill this area. So what we're expecting right now is we can see some type of liquidity is already taken out. Price is reacting to this zone. We're waiting for a continuation to the downside and then come to this area of demand zone before a continuation to the upside. So anyways, guys, if you like this type of videos, go ahead and check out my other videos. Welcome to my channel. My name is Jamal again. Until next time, good luck to you guys. Happy New Year's. Peace.